So Power Hour stream. If you're new to the stream, I will take flow requests. If you got questions about unusual whales, charting, pretty much anything. Otherwise, we'll just kind of look at the flow. I kind of like to start with the market tide, just show everybody what's going on. Look at Periscope, so on. So if you got any flow or anything you want me to take a peek at, feel free to drop it in the chat and I will get to it. It's been kind of a quiet afternoon now, a lot of multi-leg stuff coming in after the move up, so it's been a little slower afternoon there, but let's go look at the market tide to see what's going on. And it's been a very bullish multi-leg market tide here. I mean, very easy to see. I mean, call premiums have just been growing all day. Your all call premiums have been climbing all day, out of the money only climbing. Your put premiums dropping throughout the day. They're kind of flattening out a little bit here, so something maybe to keep an eye on there, but still sitting heavy bid side there. A lot of call volume coming in here. Nvidia's your major contributor to the market tide there. IBIT is second, and SPY would be your third. Meta, MU, Google, your three that would be contributing to the put premium there, but not too much ask side stuff going on there, so very bullish market tide there. Kind of looking at Periscope here. I haven't refreshed this for a while. I haven't really been watching it too much throughout the day, but 69.15 here, really heavy positive gamma here. So just kind of sitting at this level right now. Doesn't seem like we can really get above it that well, so just something to kind of keep an eye on there. Then you got some heavy negative gamma here at 69.10, so might just be kind of chopping in this area for the rest of the day. SPY net call premiums, again, ask side, puts just dropping off there. So kind of a little choppier, trendy day here. And just kind of looking at the flow here, got some CSX calls coming in here, 417, 42 and a halves. Overlapping earnings. Let's take a peek. So net call premium kind of spiking there. Let's see how our flow looks. So this one, I would say these look like buys to me here. You see that IV pop up there from that 24 in there. IV rises. Spot is filling at the ask there. Just kind of following this up, looking good throughout there. I would say those are buys there. A little longer term too, and just keep in mind with a lot of these names, everything's kind of made a pretty big move up today, so just keep that in mind. A little longer term on those. HPQ, not the best bid ask here. We'll see if we can find anything identifiable in that flow though. So this one coming in as a block trade here, you don't really get too much context around that flow. This is all coming at the same time here, so my guess is this is that same person there. Makes more sense to open 615 contracts for 614. But no change in that IV. We don't have any flow before or after. When they come in like this, I call it a block trade. I like to see that context before and after. I want to see how this flow coming in is impacting that IV, that bid ask, that spot. Not saying this is bad flow, it could move up, but I just like to see that context around it. Let's see. These core weaves, again, usually when you see that block on there, it's more than likely going to be a block trade. Not always, but you can see a block trade here. So again, this one, and this one's almost more of a mid-fill here. You can see that bid ask is 190 to 217 there. You're filling at 204 there, so you don't. It's almost a mid-fill there. You're 14 cents above the bid there. You're 13 cents below the ask there. So I mean, it's almost a mid-fill there. Again, no flow to go around this to see how this big size and premium is impacting the flow or anything there. Let's see, we got Oracle 141, 213. We can go take a peek at that one. Let me just clean up some of these tabs here. Let's go take a peek at these. Oops. Oracle 141 for 213. So these look like they just came in. That might be a good find there, Yako. Pretty much right at the money. I like that. 3% multi-leg, very low. I would just want to. I do like that being at the money with them being weeklies in case you don't get a huge move and you want to avoid that big theta. I am looking at this full chain here. Let's go take a peek. So 4, we got some more volume before this. So I just want to see that kind of full chain. Okay. So let's come up here. So the 1307 when it starts to come in. So that IV's at 62.25. We are filling at the ask. So let's kind of come here. So 62.25. We are staying at that. Bid side there. I would truly say that's at the ask. That's just kind of a little goofy off one there. Let's just keep following this up, 62.25. So I like that second group of repeated hits here. Again, you see that IV increase here at the beginning. That spot is at 485. Now, the one part that I would kind of be a little cautious on here is I'm seeing that IV drop here towards the end. So that's 63.10. Now we're at 62.86, 61.18. Typically could be a sign of them being short those puts. Again, just because that IV is dropping doesn't mean that the flow's not going to work out. And I'm just kind of looking at that price at the time as well. So we were at 141.13 there. So okay, let's just come up here. Let's see. So 141.13, 141.09. So this is the part that kind of gives me a little red flag there. That price, I mean, it's only about a 4-cent difference on that price trading at the time, and you're seeing that decrease in the IV. So it's just something I would be cautious with, and it's technically also a descending fill here too, so that spot's decreasing as it's going down. Again, that's not saying that the flow's not going to work out. Obviously, it's up a little bit now, 476, trading at 509. I would just be cautious with something like this because you're still seeing, again, a lot of net call premium on the day. Puts are still bid side. Would just be a little cautious with that one. And with them being expiring next week. The good thing about this, though, is if we take a peek at it, if we look in our option profit calculator, if I could learn to click, Monday is what, the 9th? So, I mean, 1% drop on Monday, you'd still be slightly down on those contracts. That's just the thing I don't like about swinging weeklies over the weekend, because you have that 2 days of theta decay. So again, when I'm talking about that theta decay, you have a really good strong delta though, because those are right at the money. That's a good thing. Your delta's 35, so your delta is going to be a little higher on weeklies, obviously. So that's the only thing I don't like about that, is you have that 2 days of that contract hitting. You're going to lose about $70 on that contract. But thankfully, you have a very strong delta, so you would need about, just rough math there, I mean, to see profits, if we don't move another penny from this and open up at this level on Monday, you'd lose $70 on that contract. You would need about a $1.50 move to kind of break even. Just very rough math there. Yeah, that's not bad thinking at all there either, Yako, about tech pulling back, especially after a big day like this. It would be nice. I'd love to see a big drop for you there. But and again, just because that IV is a little goofy on there, I mean, that's just one data point there. Just because it's goofy and it's dropping doesn't mean it's a bad thing. This whale, you're not going to see high IV on something like this. People don't really want puts on something that's up 3% on the day. Everybody's trying to pile in calls because they think the stock's going to keep going up higher. We can see. Let's see if we got anything else on Oracle though for you. See if I can find any other flow for you. Ooh, yeah, that is a big day of net call premium. But that's, again, that's not saying that the flow's not going to work out. Let's see what we got for flow, though. Actually, hold on, let me go back because I saw that was... Oh, yeah, that is your highest volume contract on the day. Ooh, this is interesting. I wonder if they shorted these puts. These may be short puts here. Just kind of quickly looking. I mean, they came in yesterday. 27,000. You had about 18,000 here. Sold them at 186, buying them back at 82. Could be a good sign. All right, let's see what else we can go. That just grabbed my attention before I hopped in that. So let's see what we got for flow for you. Clean up some of this stuff in here. Let's see. Let's do... Oops, wrong way. Oopsies. 1 second. There we go. So very long-term calls. Let me put a day's expiration on this thing too. We will go 20 days just to be safe. So you are getting a lot of short-term puts coming in here. That's a good sign. The 141 is the one we were looking at. Let's look at that 140. Or was that... Oh, no, yeah. So that 140 is also making a move up there, too. So that's a good sign there. You got another short-term put there. Contracts is at 1,300. Let's just make sure it's not something being closed there. Really, I would assume this is probably a new position being made there. You wouldn't 100% be able to verify that until that open interest change, since that is 1,400 contracts and there we had 1,900 open interest contracts. Could be this whale. I mean, I would lean that it's a new position. Just, I mean, 800 there plus 500 there. You're at 1,300 plus 200, so 1,500. I mean, very, very close between those big ask side calls, but I will make a very good educated guess and say it's a new position today. Maybe they're legging into the position. You never know. You never know. But I would say this is probably a new position today. I mean, it's green anyways right now, so good sign there. Then you have the 142 because we were looking at the 141. So again, another one. 60 to 80. So like this one, IV spikes there a little bit. And it comes back down. Yeah, and again, just because that IV drops doesn't mean that flow's not going to work out. Again, the stock's up 3% on the day, so everybody wants calls. And I mean, that is an ascending fill there, and then it kind of drops a little bit at the end there. I do like the big chunks in here coming in at the ask, and that's where your IV is elevated as well. I think it's worth a shot there. I mean, again, that's not financial advice or anything. That's just kind of basing it off everything else I'm seeing. Also, that 143 put here. Yeah, I mean, they're all coming in very similar timing too, so that's kind of unusual to me there. Yeah, it's just odd that IV drops on all of them. Yeah, that's a very interesting find there, though. Really interesting find. All right, let's clean up some of these. I mean, it wants to. I mean, you get below this 140 level. We've tested it 1, 2, 3, 4, 5, 6 times now, and had a little luck earlier in the day. Yeah, definitely some interesting flow though, for sure. Good find on that one. Good find. All right, let's see what else we got coming in. Rocket Lab puts. Overlap earnings in 20 days. Take a peek at it though. Oof. 51% out of the money. A lot of put premium on this one here. Call premium's pretty flat. Like, this is something that's very unusual to me. You're getting a lot of put premiums on the day. I wonder if this is our kind of the big contributor. Only 2%. So, seeing other flow as well to go along with that. But yeah, a lot of put premium on the day. Let's just look at that flow. IV is a little elevated. Again, a name that moves a lot usually. So you see how that IV spikes when it comes in. Spot is filling with the ask on it. It's a pretty wide bid-ask spread there. let's see if it doesn't look like it tightens up that much there, 108.40. So I mean that's just showing me when I'm seeing it come in at the ask on a wider bid ask spread there. The urgency, you don't want to wait for a bid, you want to get in those. So I mean it's something that's really interesting to me. I probably wouldn't take something like this just based off that bid ask. It's for sure something interesting there, and you do kind of see, yeah, that's a really, and then that bid ask gets a little goofy at the end. I mean, you're not real technically filling above the ask, but that bid ask kind of drops there, that ask does. So that's some interesting flow that I'd keep an eye on possibly, especially with all the put premiums on the day. Let's see, we got MU. Let's look up MU. I don't know why I opened a new tab like that. So MU, just first glance here, those big net call premium dips here, that gap was filled on those, so good sign there. Let's see what we got for flow coming in. Let's see what we got for flow. Let's come in here. Let's make sure we are not super deep in the money. Alright, let's see what we got here. I gotta put premium on this one. There's a lot of flow on this one. So MU, I am seeing some calls. We can look into the calls a little bit here, but face value, just quick glance here. Calls, 49 days calls, earnings in 41 days, so most the kind of little midterm ones not really looking for an earnings play. When did these come in? So let's see, 200, these are very expensive. They're in the money in 70 days, so yes, they are very expensive. 74, just kind of looking at that. Ivy comes back up. Ivy kind of bounces around. Ivy is going to bounce around a little bit. These are in the money. So whenever you're kind of seeing that price change there too, so Ivy is changing, they're in the money. So you might not get the cleanest read on something like that that's in the money. We just looked at that patch. I wasn't sure if we looked at that first candle or not. Okay, let's do that 387. So that's interesting too. I'm looking at the premiums. Again, another one where all that call premium is dropping and you're seeing put premium there. Yeah, that is interesting to me. That's something that catches my eye, where premium's still dropping, but we're moving up there. So these calls, they came in a little bit earlier, already up, so we'll take a peek at those. How about the 365s? These just kind of coming in here. Lighter volume here. I'm not a big fan of the lighter volume. They are in the money, and they're expire next week. I just want to see how that. So we had 800 contracts yesterday. Let's pop this out a little bit. Okay, we'll go 7 days. So a lot of that volume yesterday, 200. So we're just going to say 300, make the math easy. So about 600 there, 200 that there, and then 200 there. So I'm just kind of looking at that. So 150. So a lot of these, oh, excuse me. Oh, a lot of these looking like not kind of maybe more day trades on these, because you're not seeing, I mean, you're seeing 157 contracts traded, only 25 carrying over, 859 yesterday, only 293 carrying over. So you're not seeing that full volume carry over. I am kind of interested in that 2.5 volume. There's the 100. So this one, I mean, yeah, it's really goofy volume there. I mean, you don't really know who's passing off what to who and all that. That's I would probably say no on that one. I mean, they are kind of deep in the money, pretty expensive for that and for weeklies. I'm not liking that premium on that at all. How about these puts? So it looks like a lot of this volume started to come in the second. So I think, so you got 1,000 there on 2-2, and just roughly the same size there. You would have to check open interest on this one here, just because I think it looks like this person's potentially getting out there. Might be a little more candle volume on this one, but looks like, I mean, just doing the eye test there, very, very similar size there. This whale could have had another couple hundred contracts somewhere else in there, but it looks like they're kind of getting out there. And it looks like the 645 there, also about that 624 there. Looks like they might be getting out 45.91, 44.15. Yeah, I'm not getting the best read on this one. I mean, it's kind of mixed. You are seeing kind of that more short-term, mid-term calls there, but they are in the money, so that um, kind of makes it a little difficult there. Otherwise, yeah, I'm not really seeing much on that. It's the thing that's concerning me about that. I almost would like your idea there with puts, just kind of looking at, oops, sorry, go back to the 1 day. You're not seeing a ton of put premium though, but that call premium, and we're moving up. I mean, you look at that and say there's a divergence there. That price is going up, but your premiums are not going up at all. So definitely something to keep an eye on. I don't know how the chart looks on it. Oops, I don't want to look at the economic calendar. 1 second here. Let's go look at MU quick. Let's take a peek. MU. Let's go over to the daily. I'm going to kind of just get in a little bit more to see if I can find a potential decent looking spot for you here. So if I mean, you're in a good little area right now, and that's going to be kind of a crappily drawn chart. I mean, this is a spot I would be looking for. I mean, I'm on the hour chart here. You are coming up to the 200-day moving average. That is very close to the top of this resistance supply zone, whatever you want to call it. I would still consider this resistance right now. I mean, we dropped out of it, came back up, dropped, attempted the test, dropped, came up, dropped. I mean, historically, just recently it's looking good. I mean, it was support for a little bit, and we were chopping in here for a little bit, then we finally got to move up, almost retested, came up, and then failed those times in there. So it's not a bad spot to look for puts there. And look at that volume on the day too. A lot of volume here. And look at that volume just kind of tailing off too. So you're getting that bearish divergence there volume wise there. Let's see. So is unusual whales your main tool for options, or you use anything else other than chart? So unusual whales is, I pretty much stick on that 95% of the time. TradingView is the only other thing I will use besides for charting. I'm not the biggest fan of Unusual Whale's charting system. I like TradingView's charting system, but yeah, I mean, I use Unusual Whales to find all my stuff. That is how I pull all my data. So all the data you see in the Discord, that is directly from Unusual Whales. Let's see, I was thinking about, on the market map there, position at 0% around 30 million contracts. Let me pull that up here. Let me pull up the market map. Is that today that you saw that, Lilu, on the market map? Glad to see people are using the market map, though. That thing is really cool. How do you have that filtered on your market map? Just so I can kind of, are you doing it by, let's see, maybe if I read, that might help. Around 30 million contracts. Net premium calls and, okay. Premium, that call. So MU, yep, I see your spike here. So yep, that's where you're seeing that. So that is what I was kind of hitting on there with the net call premiums. I don't like that setup there for a continuation higher. I mean, just premium wise. I mean, your put premiums are up, call premiums are down, so that, oops, go back to the market map. So yeah, that's where you're seeing that negative 32 million in net call premiums. So that's how I find those net call premium gaps typically. So if I were to pull up like Google and Meta here, and you're seeing a lot of bid side calls there, so that could be something that's interesting. Like Google, here you go. Look at your big bid side call gap coming in here. That is something that should get your attention. Now I like it better if we weren't already kind of down. Let's see if we can find one that's not super beaten up. But yeah, no, that's a good find there, Lilu. That's a really good use of that market map there too. So like meta here, like this is interesting because you are seeing that net call premium here. You're seeing that put volume up there. Price would have to eventually come up here, and to get to this number, you'd have to see about maybe that 620-ish level there. So you could see a small drop there to get to that level. Um, let's see if I can find an inverse one here to the upside. Yeah, I really love the market map. This is a very good tool that a lot of people do not use. Let's see if we can select Nvidia, AMD. Yeah, and this is what I do typically every night. I do like to see kind of the bigger spikes there too, just so you can get more bang for your buck there. So like Nvidia, like this is something very, very interesting to me here. Big spike in the net call premium here. Big spike in the net call premium here. Again, you're looking for that price to come up to these levels. So again, for this gap to get filled, Nvidia would have to come back up to that about 190s, 190-ish or so there. So I mean, that's just a way to find those names with the big premium. And then if you match it up on a chart and you kind of look for other contracts too to go along with it, that's a really good tool. Let's look at AMD. AMD was a really good example, and I'm still kicking myself for cutting that one because it closed below my gap. This is probably one of the best examples from that net call premium group, and I can actually let me just pull it up here because I want to show everybody what it looked like before the move here. No, that's the bearish one. Let me go find the bullish one in here quick. Give me 1 second. 1 second here. And if you go and look through that, and if you look in the channel, I'll pop it up here too. But I'm just trying to find that AMD, sorry. AMD, AMD, AMD. Okay, good example here. All right. So like this one posted on 1.8. So like this is how it looked in real time. Like this is what I'm looking for. You see how that price is not even close to this, and it's a massive spike in that net call premium. Again, that price is supposed to gravitate towards that and essentially potentially fill that gap. So now, and also if you do kind of want a better example too, I do have a couple direct video links in the channels too if you want to watch some more education on it. So again, there's that 130, or what did I say? 17, sorry. Price just trading, and then explosive move up, and you start seeing other call premiums come in here. I mean, here's your level there. Fills that gap, and AMD was a couple bearish. I think it was earlier in the week. I mean, you start seeing that bid side call premium there. Price was trading above, and boom. I mean, they had earnings too here, so I mean, it was my first time kind of doing the net call premiums over earnings, but like this is something I wouldn't day trade or like get like week out contracts. Like this is a good time to like find a potential spot like the AMDs. And it's stupidly closed below my uptrend, so I ended up cutting, and then it rocketed up the next day. But like finding those spots with that flow is a huge, great tool there. So let's just like look at a couple more here. Tesla, like I'm not seeing really anything. I mean, little bullishness there on Tesla today, so you could continue to kind of see that go up. But I mean, just like look at all that outflow on the calls on Tesla, and I don't look at puts, so for so for puts, like for that to work, so like okay, you might see a large spike in put premium. Well, to fill that gap, the price has to go up, so you don't really combine those two. Like it could be a tool where okay, well you're seeing put premium come up in a lot of bid side calls. Well, that could insinuate some downside there. But I mean, like look at all these Tesla outflow call days, and I mean you're just trading up here and then eventually boom. I mean that's almost to the like exact bounce there. I mean actually that is like to the penny. That's just crazy. Like Amazon today, and Amazon was one of the other ones that was posted in the group. I mean you see how that price gravitates towards those levels. It's a really good tool. Really good tool. Like APP, like here I would be looking for maybe some upside. Your big downside gap again, God, almost to the penny. That's just insane. And I like to look at that 14-day map too. Like if you start going out 30 days, like it can get a little goofy. I mean, I look at all the time frames. That 14-day time frame seems to be my favorite. Like if you look at this 2 days out, you're not really gonna see much. Just I like to pop around, just look at as much data as you can. So like here, I would be looking at a potential upside move, but again, you have earnings, so it just depends on what you want to risk and so on. Let's see, got another question here. Let's see, it's moving over, but yeah, no, it's a great tool there, Lilu. Let's see, do you find potential trades the day before on the charts, or do you find them on unusual? So like, and it depends on what kind of a trader you are. So like, good example here, like I took those SoFi calls back on the 4th was what, Wednesday. I got out of those the same day. Oops. I mean, and it depends on what you're like the SoFi like if I'm following the flow, like I'm probably more scalping the flow more so, just because I don't know what that whale's fully doing. Now, like if I'm looking at those net premiums and all that, I can do that at night. Like I like to look in that hottest contracts, the highest volume contracts channel, and kind of match that up with the charts. But like the last week, a lot of that flow's overlapped earnings, just hasn't looked super good, or the chart doesn't look super good. So I mean, you don't need to trade every single day. And like like the UNG puts from last Friday, like that's just kind of knowing like the market and like the macro and all that. Like the UNG, there was no flows, and I mean barely any charting with that one. I mean, you looked at that daily chart on UNG here. Let me just pop it up. Like I was just like I might just pop it open. I'm like, okay, well we're coming into a good resistance here. UNG I liked because we obviously skyrocketed so much because of the cold weather, but then you know weather's warming up. So I mean it's just kind of knowing like that stuff too, just kind of having a full view on stuff. That's more commodities though. But like the flow here, I mean, I'm a little more cautious on this. Like if I really like that flow, I mean, I might be in 5-10 minutes in this. I mean, like these ran from 84 up to $1. Like that's a really good quick return there. I mean, that's 20% or so. Don't quote me on the math there off the top of my head, but because you don't know fully what that whale is doing. So I mean, I prefer to kind of look at the charts and match up the flow to the charts. It's, I don't want to say the safest way to do it, but you're going to see better results if you're using multiple data points like the flow, the charting, just kind of understanding what's going on. Like the last 2 weeks for me, very, very light trading. And like here, I mean, we had 3 alerts, trackable alerts this week. A lot of that flows in that risky flow channel because a lot of it's overlapping earnings. That bid ask is goofy. A lot of that flow was chasing calls or puts. So I mean, it's not the best flow. Like you don't get the best flow during the volatility time, just because I mean you see a lot of people chasing. That IV's a little goofy, and you're overlapping an earnings season too, so a lot of those names could be overlapping earnings. So I mean it's a lot more riskier flow right now. I'm I'm hoping next week we can actually get back to some more solid flow alerts, because I mean a lot of you have been in here for a long time where we'll have like 9, 10 actual good trackable flow alerts for the week. Like it's three this week, so I mean like I typically do a live review of these, but I mean for 3 contracts I'm not gonna waste people's time. I'll just do the video for that one. But like that's kind of how I use the flow there more a little bit, if that kind of makes sense. It's you just want to use as many data points as possible to find the potential best outcome there. But like me, I mean, like if you're looking at like let's look at these Joby calls that came in. Let's see if I can find something more short term that might be interesting. Like there wasn't really anything today either. Like these wolf calls. Like okay, let's say you're sitting here in the morning, and these aren't going to be a good example either because it's just like this is how that flow has looked the last 2 weeks. Just absolutely just not the best, and it was already up on the day too. So it's like, do you want to chase that? It's risky to chase something like that. Yeah, I don't. Let's see. How about those MU? Oh yeah, that's junk too at 0 days. Yeah, there's gonna be too much on that. Let's see. Like if I'm watching the flow feed and I'm seeing something come in like this, like all these Amazons coming in. I mean, you can't tell me this is not the same person there. Same date, very same similar timing. That spot's a little kind of goofy there, but obviously you're seeing that stock moving at a different price there. Like you look at this, and something like this, I almost don't need to look at that actual flow there because you're seeing so many hits there. The odds of somebody selling those and they're hitting them like that, probably unlikely. But like this, I mean, now if I was trading something like this, and I will just pretend these are very short term just to kind of make it a little easier. So like here, I mean, you see that IV kind of pops a little bit and then it drops here, but then it's coming back up. So like this is just kind of looking at that, and then you have your big size. So like I mean, just see how that IV is kind of increasing here. Then you get your big size here. So I mean, like just kind of looking at that, like I mean, your IV is decreasing and then it's increasing, like something like this, and just kind of knowing like how the market is throughout the day too. Like this, I probably wouldn't. I mean, I didn't even have to really look at that one. Just the way it's coming in, and you see like that spot pretty much increasing, good size, good premium there. I mean, this is more than likely going to be a buy. I mean, you see that spot coming in here. I mean, it's a lot of hits on that 250. Like the odds are they're expecting it to go up, and knowing that it was beaten up very badly too after earnings can be a good sign too. So like here, like if I was trading these, if these were, let's just say 19 days out, like like if I'm up in profits on something like this, I'm gonna throw a stop on. Like I don't know fully what that whale is doing. And I mean, I always tell people you can put stops on and lock in profits, but you can't come back in and make profits on a loss. So you can recycle your profits if we continue to fall, but you can't recycle a loss. So like it's better to secure profits, and if you really really like the flow, re-enter it, because like here, okay, again, so these were 882, come all the way up to 1029. I don't care if they're 200 days out. I'm going to make sure I secure some profits, because if you're up at 1029, well, these are now back down to 857. You're back below that whale's entry. If you still really like that flow, and you had a stop on here, and let's just say you got out at 954, just good number there, and you see that we're dropping, hey, maybe we're down in the low eights and you can see that whale's still in, you still really like that flow, well, recycle those profits and get back into that trade versus kind of, just letting it sit like, oh, they're 200 days out, I don't care. I'm trying to capitalize and get as many or as much profits as possible. If I had to get up here and I mean, if I'm up, what's the math there? 882 to 1029, so 8, I don't know, 20% or so. Don't quote me on the math there. It's Friday. Um, if I'm up 20%, hey, I'll put a stop on it 15%. I still like the flow, but hey, let me recycle some profits and keep getting in and keep getting profits. What if this thing bounced 20% 3 times and then it dropped back down to where that whale was red? Well, I've secured profits at 20%, 15% 3 times, so I'm already technically ahead of that whale where I have secured profits 3 times and I'm recycling those profits and getting a better rate of a return versus just letting it sit here for 100 some days. Because again, you just never know what that whale knows in the end. At the end of the day, you just never know. Um, let me, yeah, Matt. Let me pull up those Googles. Yeah, sorry to kind of go on a tangent there, but I mean, it's nice to explain it from like my point of view too. It might not always make sense, but yeah, feel free to ask if something doesn't make sense. Let me look up those Googs there, and I'm guessing just off the top of my head, Matt, I'm gonna say it's probably because they were the weeklies. Let me go take a peek. So 4% of the money. They did kind of move a little bit there. See, so 20 at 260, so not 30% on them. So like a perfect example here. I'm actually gonna look at the flow, then I'll go into the example there. I don't want to undermine the flow there. So like this, they're weeklies, and you can see when that size and premium comes in here, that IV drops a little bit there. Mostly because they're the weeklies and they are, I mean, 5% out of the money. Like if you, I come back here one more time, sorry. Like if you come in here and take a peek, that weekly, the 5% out of the money. Let's look at our table. And Monday is the 9th. So like Monday, I mean, 0% move, you're probably going to have to see about a percent move there to kind of see anything good. I mean, even for a 20% move or a 26% gain there, you're going to need a 2% move. So, I mean, it's just kind of factoring that theta with those contracts. Like now if I come down here and I mean like look at that delta 21 to theta. Now if that delta was like 40 or 50, you can make that you can recover that theta quicker. So I mean that's kind of why that one is in there. And then you also have that little IV drop. Now good example here is like if I was scalping the flow here, I see all these contracts come in. I know it's big size, big premium. Couple ways you could approach this. You know the market's kind of running on the day, kind of trending up. Maybe you want to try to treat these as a small day trade, like you would cut. And actually, let me look here. 4,800. What do we got here? 600. Okay, yeah. There's no way that whale's out. I was just kind of looking there. I was like, maybe they're taking some off, but no, that's barely anything. So like this, if you get in, and that's the thing with the flow, it's time sensitive. Like I'll have people come in like I've had people say like the average is posted as 2, and they're like, oh, I got in at 250. Like, you shouldn't be chasing a piece of flow that's up 25%, 30% already. Because I mean, if that whale gets out, they're out in profits, and then you would be getting out with a loss. Like that's why it's always important to look at that timestamp too. But like here, so like if I was trading this, and it's easier to say in hindsight, obviously, but I'm coming up here, I see a big quick move up to that 260. We're just chopping around that 240, 250 for most of the day. I'm probably going to throw a stop on maybe at like 225 or something just so I know they're weeklies. I probably don't want to swing them over the weekend just knowing that. You come down here and you collect some of your stop hits, you collect a big chunk of your profits, or you're sizing out slowly, whatever you do. And now we're back down to 173. Maybe you want to get a discounted entry because you secured enough profits to kind of cover something like that. Like now, if I wanted to have these for next week, I know they're at a discounted entry. That whale is still in. Maybe I want to swing one over the weekend, maybe a couple contracts or something. Now, what I would do is, and sometimes you will miss a move doing it this way, but the safest way to do this would be waiting till like Monday, and maybe you want to grab the calls that open, because then that way you avoid the 2 days of theta decay. Now, if these are, what was that theta decay on these again? 30 something, I think. Yeah, 30. So, okay, let's just do some math. Okay, so we're going to say Google stays at this level, all same price, doesn't change. We open at the same level on Monday. These are trading at 140. You have a significant discounted entry, and you know that whale's still in. That is a good way to kind of get that, just because you don't have to sit through that 2 days of theta decay on those contracts, and you're getting a better entry than that whale, and you still secured profits from earlier. Like that's one thing that I've always been for, is when I'm seeing profits, and I will usually put a stop on at break even. Like if I'm up 10%, if I can continuously hit 10% gains on contracts, that's a solid trading strategy. I mean, because you see a lot of people, I mean, they're going to post, 75, 85% wins, and then you think, oh, that's the norm. No, and what did you have to go through to get that 70, 80% win? Now, like, if I was in these, so let's say these go 80% on Monday, and I was in it too, and they dropped all the way down to 173. I was sitting in a loss in these for the weekend, for the rest of the day. I can show you a big win, but what did I have to go through to get that win? Was it a smart trade? Now, smart traders, and again, I mean, you're seeing those profits, like you're up 30% on these. You should not be letting those go red. And that's not that I'm not calling these whales dumb or anything, but you see it a lot where the whale will get a nice 30-40% return and the contracts go red. Like, you don't know what they're doing. Like, this trade, it doesn't show it's a big multi-leg, but you just don't know what this whale has on the other side of their screen, what they're trading. If this is part of a bigger scheme, you just never fully know. So, I mean, you always have to be cautious from your standpoint and secure profits when you can. So, like, that's the Google one. Sorry to kind of go off again on the Google for the weekly, but I mean, that's just kind of how I would trade something like that. I mean, it's you securing 15-20% over and over and over again, instead of like Amazon, like when we were talking about that whale gave up all those gains. And again, I mean, even Google, like, if you would have secured 30% there, that we'll just say you secured 30% here. Well, they're red now. You secured money. This whale didn't. You don't know what they're doing. Like, overall, I mean, and you secure 30% of your investment. You can, maybe you want to risk 15% and grab, let's just say you sold 10 contracts. Well, maybe you want to swing 2 contracts over the weekend because you have that profit. So maybe it's kind of, I don't want to say a lotto, but I mean, it's something where, you're okay because you secured some profits already, and the risk outweighs, or the reward outweighs the risk there, knowing this whale's still in, and you have the the extra funds that you secured profits on. Yeah, it's and that's why, I mean, like, I'll tell people you don't need unusual whales to be in the Discord, but the platform pays for itself. Like, it's so easy. I mean, it's way easier just to have all your contracts here, or if you have them saved up in your MyFlow. I mean, you can just easily click, like, instead of like, okay, I want to see if these Nvidia puts are still in. Oh, okay, well, maybe they're not because I see a big spike there. These IWM calls, like, you can easily just click there, and you don't have to kind of sit and guess, because I would not. You don't you can't trade just based off volume and open interest. Like, you'll see people say, "Oh, there's 100,000 open interest contracts on this SPY March 10th put or something." Well, that doesn't mean anything, because if the volume looks like this, well, it's not a singular whale where you can like identify them, and if there's a bunch of contracts changing hands, well, maybe that whale's out, and you look at that open interest and you're like, oh crap, that whale sold, but that volume or that open interest is still there, so you think that original whale's still in. So it's there's plenty of ways to use it. Plenty of ways to use it. Hey, we got some MU puts coming in here. Lilu might like these. More 7 days, 14% out of the money on these. So these, interesting flow. Oh, we got 10,000 contracts back on the 4th. So let's just go look. So like here, good example, very good example. I'm going to make a very good leap of faith, educated guess on these. So if you're just looking at open interest, you're going to say, okay, this chain has 10,000 contracts on it. Well, we have 11,000 volume today. I'm going to make a educated guess. This person is probably cutting for a loss. You won't know till Monday until that open interest changes. Now let's say that open interest doesn't change. This is why you can't just go off open interest, because that original whale gave those contracts to somebody else. Well, that open interest isn't changing, but that original whale is out. So, like, that's why when people are just like, oh, look at the open interest on that, like, that doesn't mean anything, because the original person that had all the contracts and volume and open interest isn't in there anymore. So, I mean, you're chasing something you're just chasing a number. Like here, at least you can visually see that, how it's working out there. So I'm glad we got that example there. All right, see if we got anything else kind of coming in here. Yeah, I keep seeing these owl puts and owl calls. Like, I would not touch any of this stuff. There's just too much of this going on at earnings. 68.11. Yeah, I mean, I would read these as a buy, though. IV spikes. Spot is filling pretty much at the ask there. Let's just see. 25. Spot's filling. Yeah, I mean, like, I would read these as buy. I don't like that bid ask, though. A lot of put premium on that, too. Does anybody have any flow they want me to look at? You got about 5 minutes left. How about these NCLHs? Long term there. Let's see what we got. 3,400. What's there? 1,400. So 50. So I mean, again, I would assume a decent chunk of this volume will carry over, but you have that 3,400 contracts there, 1,400 there, about 1,500 there. So again, you're at 3,000. You have to double check that open interest. You have to double check it. That's just because it's at the ask doesn't mean it's going to be a buy. Like, there are plenty of examples of that. Plenty of examples. If we had a little more time, I could pull one, but I don't want to burn up the last 5 minutes. I just want to kind of look through that flow. NCLH puts here. Now, like this one, you know it's a clear opener. We're going to say 3,000 contracts. Here's 29.55, but 3,000 to make it easy. This is a clear opening position. 100% I will tell you this is a position being opened. How do I know that? 2,955 contracts does not fit into the 1,692 open interest. This is 100% an opening trade. I can tell you that right now. Now looking at the flow here, and these look like a potential buy actually. Let's see. So, maybe not. So IV drops when these come in. Spot is filling at the ask. 47.42. Yeah, so that IV's dropping as it's coming in here. I don't like how it's like uniform and it's dropping there. I mean, you're sitting at 57.42, then you're dropping to that 56.77, then you drop down to that 57.63. That spot is kind of all over the place too. I would almost say they're probably selling these puts, but we don't know what the full trade is here. So like this is a piece that would go into that risky flow because one, it's 42 days, we have earnings in 20. I don't consider it earnings flow unless like if the so 26 to 26. So like if these expired in 21 days, I would consider this earnings flow where it's expiring that same week. That's when I'm kind of I'll use that logic like, okay, well, they're probably looking for a move after earnings because they are expiring that same week. We don't know what this whale is doing. Are they expecting something to happen after, before, so on? I mean, there's just a risk holding contracts over the earnings report. Like, I mean, they could move next week. You just never know. And I mean, a lot of put premium here, too. Let's just kind of zoom this out. Yeah, I mean, huge day of put premium there. Huge day. Huge day. What's the market doing into close here? 2% day. Oof, what a pop. What an end to a volatile week. It seems just like such a volatile weekend. I mean, you've already almost erased the last 3 big red days. I mean, a little ways to go there, about $4 more, $5 more on there. But I mean, that's how fast the market can move. So like, that's why I'm always saying when I see profits, there's nothing wrong with taking solid 15, 20%, 10% gains when the market is wild like this. There's nothing wrong with securing that. I mean, I had somebody give me crap because I had like a 2% portfolio day. Like, if I do that every day, if I did 2% every day for a month, 4 weeks in a month, 5 days a week, I mean, 10% a week, 40% a month, I mean, it adds up. So, I mean, like, don't ever feel like, oh, it's only a 15% gain. That adds up over time. Like, aiming for the home runs and letting contracts drop, like, so like UNG, I mean, we had, like, that's a home run where you get a massive gap down. Like, we had the UNG puts. Well, I mean, you typically aren't going to always catch something like that, but I mean, that was a 12% drop that we caught on that. I mean, that's I don't want to say rare because it happens, but I mean, it's more unlikely you're going to always hit trades like that versus hitting consistent trades over and over. And it makes you a better trader if you kind of adjust up your stops and take profits. You're going to be a lot happier too in the end. All right, let's just see what else we got here. Anything else? Oh, we're almost done here. Yeah, what a nice way to end the week, though. Netflix calls. Yeah, here comes the Netflix calls into close. Oh, I didn't even have time to pull those up. 36.15. So like that IV drops here. I mean, something that might be kind of a red flag. Let's just look at that first candle here. 36.16, 36.18. So I mean, yeah, might be worth a stab. 36.16, 36.18, 36.11. Yeah. Maybe. I mean, again, something that's in that risky flow. But I mean, we were trading at 81.49 when that big chunk came in, and then 82.25. So it is kind of odd that IV drops. But all right, everybody, thanks for hanging out. I'll have the flow recap up a little later. Typically, we do it live, but 3 trades, I'm not going to waste everybody's time for that one. But all right, everybody, thank you for hanging out, and have a great weekend, and we will be back at it next week.